Yeah, I move Amendment 1. That's to delete all words after that and substitute the following. Dáil Éireann resolves that the Pensions Amendment Transparency and Charges Bill 2021 be deemed to be read a second time this day, 9 months, to allow for, amongst other things, an examination and assessment of the issues pertaining to the provision of information to pension scheme members in relation to costs and charges incurred by pension schemes, and, if deemed to be required, to identify and develop the appropriate policy responses and associated methodologies. I am happy to accept the further amendment tabled by my Labour Party colleagues, and I am grateful for their consideration in this regard. Sorry? Oh, is that it?
Sorry, Minister. Yes, I should have. Want to move it?
Required.
Do you want me to keep? Oh,
sorry, no, because I think you should have 15 minutes.
Oh, sorry, you're first.
Pardon me. No, I know. I did call on you after you moved it, but you have 15 minutes. So
you did, to be fair, Chair.
If you want to speak to it, please.
Thank you.
Thank you.
Absolutely. Thank you very much, Caroline, and thank you, Minister, and thank you for the intentions you've expressed. It is appreciated, and I'm more than happy, as are my other Labour Party colleagues, to work with you on this, what I think is a very important piece of legislation. And we know, and you probably know in your own experience, that being said, maybe not this week, but there's huge, intensive interest in pensions more generally, that when we discuss pensions, people's eyes tend to glaze over, and that's unfortunate. We're living in the midst of a very serious cost of living crisis, and we've all seen the basic price of food, of energy, of housing, of basic goods escalate before our eyes over the past year. And too many people have also experienced firsthand the permanent cost of living crisis in our dysfunctional housing market. And often when I talk about housing, I describe that as obviously the most significant investment anybody is likely to make in their lifetime. But the second most important investment anybody is likely to make in their lifetime is the taking out of a private occupational pension. And one would imagine that we would have the same kind of interest and the same kind of transparency, dare I say it, around pensions as we have in respect of mortgage products. But the reality is that we simply don't. When it comes to pensions, the fees and charges associated with those complex products, unnecessarily complex products in my view, are rarely understood. And this is despite such products, as I said, often being the second most significant investment we will make in our working lives. And such a lack of understanding isn't due to ignorance or a want of trying. It's no reflection on anybody who might consider themselves rightly, objectively to be smart, intelligent, numerate. Even the most diligent people are left baffled by the Byzantine private pension structures and the charging schedules that we have in this country. But when we dig beneath the surface, it's clear that Irish pension fees are completely out of kilter with the reality in our counterpart EU member states. Now, this isn't a new problem. For years, various government and international reports have highlighted the problem of high charges, high management fees, high charges. They've also noted a culture of concealment within the Irish pension market, something that this bill aims to address. And that's what is at the heart of this bill, transparency. As far back as 2012, a report from your own department, Minister, noted that there are significant deficiencies and inconsistencies regarding pension transparency. It too noted little evidence of a culture of providing clear information in a simple manner. And nobody could have been surprised when they read the 2014 OECD report, an independent report from an internationally respected think tank on Ireland's pension fees, when they stated, and I quote, "One of the most patent signs of a governance failure in Ireland's private pension system is the high charges often observed." Now, where there are governance failures, it is up to a regulator to intervene. And they're strong words, governance failures. And where the regulator is not empowered to intervene, it's up to this legislature to intervene and to provide the legislation within which a regulator might work to represent the best interests of citizens and consumers. Now, that report cited how Irish pensions were, and I quote, substantially above the charge levels observed in the best performing countries like Denmark or Sweden, where total management fees are below 0.5%. It's not unusual in Ireland to see management fees at 2 to 3%, maybe more. And that's an absolute scam. It's a scam perpetrated on hard-working people. In short, the evidence shows that not only are costs higher, but they are too often hidden from unsuspecting pension customers. Indeed, the latter often allows the former to occur. A very interesting 86-page study was provided to me last year, and it further reiterated and galvanised these points. It gave us more objective evidence as to what's going on in the Irish pensions market, and it provided some really significant information. This thorough document sets out how the impact of the charges, particularly the annual management charge, can wipe out up to 60% of the final pension pot after a worker and their employer spend years putting it together. And the study takes the case of a 32-year-old woman earning €50,000 a year. Modest income, reasonable income. In this days, one would wonder though. She's retiring in 2057 at the age of 68. The report shows that a pension product with 3% of an annual management charge and 3% contribution fee will create a pension pot of €686,000. The pension contributions by the individual and employer will have been €418,000. Fees going to the advisors will be an eye-watering €300,000. Now, this is an absolutely astonishing figure, Minister. If the pension fees were 1%, for example, as it should be in my view, the pension pot available to the individual would be €1 million, an extra €356,000 in total. So although the total cost of fees can be argued over by the actuaries, no one in this chamber can credibly deny that transparency and high charges aren't a real problem. Indeed, this is a problem you have yourself acknowledged, Minister, to be fair. Your decision to call on the Pensions Authority to introduce a cost transparency initiative in response to the publication in April 2021 of the Labour Party bill was welcome. It's my understanding from a recent parliamentary reply received by me from you, Minister, that the Council's report has recently been completed, and I would welcome in your response, if the details are available, an outline of the recommendations of that report and when you intend to make its findings public. Such action, I think, will be necessary to restore confidence in this government's capacity to effectively regulate and protect pension customers. Indeed, such transparency with regards to charges is crucial in the context of the long-awaited introduction of auto-enrollment. Thousands of workers currently without a pension need to know they can trust the fund with their hard-earned money, and with their pension pot already evaporating into thin air due to inflation and other factors, they won't welcome the idea of a future pension pot being further eroded by less than transparent fees. As it stands, most ordinary pension customers are already paying extraordinary sums of money in excessive AMCs and contribution fees and so on. In real terms, their pension pot, which is a product of their life's endeavours, is being drastically eroded by up to 1/3 in some cases, as I have explained before and as I've explained here this afternoon. This means, critically, and this is something I know that will be of concern to you as Minister for Social Protection, less money to pay the bills in old age, lower quality of life and ultimately poorer health outcomes. Because we know from research that those with smaller pension provision, those with less of a pension to rely on, have poorer health outcomes, and poor pension provision naturally leads to a shorter and less healthy life. However, if this bill is passed, it will be a first step in protecting the hard-earned pensions of citizens. I'm not overstating or making over any excessive claims about what this legislation will do, but it certainly will help. And it would finally require pension trustees to provide clear and concise information about the number and amount of charges under the scheme in both cash and percentage terms. In simple terms, it will mean that pension customers will be able to see exactly how much they are being charged. They will also see how this will have an impact on their final pension pot without having to decode the complicated small print. In short, these changes will radically transform the information available to savers to enable savers to actually make informed decisions themselves, and it will ensure that they can reliably compare products to get the best value for their retirement. So the time to act on this is now. Not only is action required to protect current and future pensioners who are doing their best to put away an adequate nest egg for retirement, but it's needed now, and it's also required, Minister, I hope you would agree, to protect the public finances and to ensure that there is less strain on the social insurance fund into the future. Pension deductions by employees and employers totalled €2.5 billion and €2 billion in 2019 alone, respectively. This comes at a significant cost to the Exchequer as well in terms of pension reliefs, something that we don't always consider when we discuss pensions more generally. The cost to the Exchequer in terms of the generous by international standards reliefs that are available to encourage people to save for their retirement. So it's essential, Minister, to ensure that the very significant reliefs provided to incentivise pension savings are no longer cannibalised by costly pension charges. And we also need to make sure that this multi-billion euro pensions industry is finally made honest. We saw a decade ago where our unaccountable banking sector got too big for their boots and behaved recklessly as a result. We're still living with the consequences. This ultimately had a disastrous knock-on effect for people in the real economy, consequences that, as I say, are still evident today. Now, there are many, many good people, very professional people, brokers, people working in the system all across what is a valuable industry for this country in terms of employment, who do a very good job, who do their job professionally and do their job ethically. 99.9% of the time that is the case. But what this is about is making sure that we have the kind of transparency that people who are saving so much for their retirement really, really need. There's a real risk that a lack of transparency, trust and openness in our pension market may lead to similar mismanagement as we experience in the banking sector, with equally, if not greater, consequences for savers and for the state. So that's why, Minister, in conclusion, in addition to this transparency in charges legislation, I think it's time that we had a full pension market review. Similar to the recent banking review initiated by your colleague Minister Donoghue, this will bring together all relevant stakeholders and allow the public, at the end of the day, this is about the public, to come together and have a real say on the future of the industry on the island and how it is going to work more effectively. It's deeply disappointing that in response to a recent PQ on the issue that you stated that you don't have any intention to hold such a review, but I would ask you to keep that keep an open perspective on that question. Minister, I want to thank you for your time this evening, for coming in here yourself to take this bill as the Senior Minister in the Department. I think we do need full transparency in relation to charges and fees on pension funds. It is interesting that the experience in Europe is very, very different to the experience here. And I think it is time to bring those stakeholders together to chart a course for the sector, one that has transparency, accountability and affordable fees at its heart. Do we deal now, and I'll take your guidance, Chair, do we deal now with the question of the amendment and my amendment to the amendment, or is that something we'll subsequently deal with?
Are we lost between amendments of amendments? Is that really what your question is, Deputy?
Exactly.
But no, we're going to...
Does the Minister move first, or do I?
Yes, exactly. The Minister has 15 minutes now in reply. Apologies, Minister, for interrupting you, but I realised I'd skipped over the 15 minutes or so of Deputy Nash's introduction to the bill. So, Minister, now, if you want to resume.
Thank you, Cathaoirleach. And just to say that I am happy to accept the further amendment tabled by my Labour Party colleagues, and I'm grateful for their consideration in this regard. The 9-month timed amendment to the bill will allow for consideration by my department of the provision of charges-related information to pension scheme members and to report to the Dáil. And I just want to thank Deputy Nash for his work on preparing the bill and providing the House with an opportunity to debate this matter. I fully accept the spirit in which this bill is being brought forward, and I agree that improved pension cost transparency and better outcomes for pension savers are always desirable. The availability of comprehensive and transparent information on costs and charges is important, and it helps consumers to decide whether investments represent value for money. Prior to commenting on the bill itself, it is worthwhile to first note that Government continues to progress several key initiatives or has recently implemented policy measures which will lead to considerably reduced administrative costs for pensions and improved cost transparency, which I will now set out briefly. For the purposes of transposing IR2 requirements, regulation signed in April 2021, that requires trustees to draw up and provide scheme members with an annual pension benefit statement containing key information about the pension scheme. Those regulations require that the statement contain information on pension projections and costs incurred by the scheme over the past 12 months and provide that such information should be clear, it should be succinct and comprehensive and avoid the use of jargon. Given the recent introduction of these requirements, it would be more appropriate and prudent for a sufficient period of time to have elapsed prior to introducing or implementing additional requirements. The Roadmap for Pensions Reform 2018 to 2023 highlighted the very large number of private pension schemes in Ireland, numbering approximately 160,000. It also highlighted concerns regarding the professional fees charged to these schemes, both for administration and investment advice, and the standard of governance of these schemes. The roadmap sets out an approach to reforming the pensions market and rationalising these schemes, which will contribute to lower overall pension costs in the future. Charges incurred by schemes should also be considered in the context of ongoing work to develop a master trust regime, which will realise significant consolidation of pension schemes. This will enhance scheme governance, achieve economies of scale and result in reduced administrative costs to schemes. Research has shown that larger pension schemes incur lower pension costs, particularly across defined contribution pension schemes. Deputy Nash will also be aware that I wrote to the Pension Council in March of last year requesting that it consider the issue of pension costs in Irish schemes, including issues with regard to the transparency of these costs. Specifically, I asked the Council to consider the merits of introducing a cost transparency initiative similar to that in the UK, Denmark and the Netherlands. The Council's report was recently completed and its recommendations are currently being considered by my officials. That examination will require consultation with the Pensions Authority as well as other government departments prior to determining the appropriate policy response. And I hope Deputy Nash will appreciate that the introduction of new provisions into the Pension Act, such as those proposed by the bill, would be premature until that examination has been finalised, which is why we have suggested a timed amendment this evening. In March of this year, the Government approved the final design principles for the Automatic Enrollment Supplementary Retirement Savings Scheme. A general scheme for the legislation has recently been approved by the Government and work in this regard is ongoing in consultation with the Office of Parliamentary Counsel. It is envisaged that the scheme will impose a charges cap on auto-enrolment providers, and it is essential that any information provided to scheme members is, as required by IORP2, set out in a clear manner and presented in a way that is easy to read. The complex nature of the proposed statement as set out in the bill, while obviously introduced with the very best of intentions, raises concerns as to whether it can achieve the intended policy objective of providing such clarity and as such whether it will comply with IORP2 information-related requirements. People are often reluctant to engage with pensions, and the more detailed and complex the information, the less likely they are to engage with it. In addition to these concerns, the statement proposed by the bill will necessitate complicated calculations in relation to such matters as benefit projections and anticipated reduction in yields. Again, I fully appreciate the Deputy's intention here, but this measure would increase the administrative burden on schemes as well as resulting in higher costs arising from the engagement of specialists such as actuaries to provide these calculations. As we know, if a scheme becomes more costly to run, this will negatively impact on the pensions payments ultimately payable to scheme members. I will now turn to the provisions in the bill. The bill as drafted applies to all pension schemes. However, it would not be possible to apply most of the provisions to defined benefit schemes, given that the administrative costs are ordinarily borne by the sponsoring employer rather than the individual pension saver. The bill sets out detailed and complex provisions in relation to the matters that shall be specified in the proposed statement of the impact of charges. This includes projected level of benefits, the number and amount of charges incurred in the next 12 months, which must be expressed in 3 different ways, and the anticipated reduction in yield. This is problematic, as some charges may not be known 12 months in advance and would depend on the contributions made and investment growth achieved. In addition, previous research has highlighted that charges communicated in percentages appear difficult to understand. The bill proposes that the statement should contain information on reduction in yield in percentage and in cash terms. Reduction in yield represents just one method of expressing total charges, and it may not be the most appropriate in the context of the impact of charges on a pension scheme. In any case, reduction in yield cannot, by definition, be expressed in cash terms. The bill also proposes that the statement shall be provided within 7 days of any increase in the number of amounts of charges. Any charges based on accumulated assets would result in the charges increasing when assets do. Every such increase would automatically trigger an obligation to issue a statement, resulting in a higher administrative burden and costs being incurred by schemes. There are a number of other technical difficulties with this bill which need further consideration and remedy as it progresses. As I have already outlined, any new proposals must take account of the existing information-related requirements imposed on trustees, as well as the various policy initiatives currently underway. And this is to ensure that the proposals do not add greater complexity and duplication for pension savers and schemes. I am of the view that the timed amendment will provide an opportunity to consider the approach to the information on charges in a holistic and integrated manner. I again commend the Deputy for his work in preparing the bill, and I am happy to engage with him in the months ahead as we look to progress measures to ensure pension schemes have greater transparency, which is certainly something that we all agree on. So, and just to say, you mentioned about the lower paid workers not having a pension, Deputy, and approximately over 700,000 people in this country do not provide, working people do not provide for a pension, and that's why I have introduced the auto-enrollment scheme, and that means that for every €3 you save, your employer will match that, and the government will top it up with a further €1. So for every €3 saved, you'll actually have a pot of €7 in total. We're progressing the legislation on it, and it is my intention to move this on as quickly as we can and get it operational by 2024. January 2024 is the plan, and there's a good deal of work being undertaken at the minute. So, Deputy, thank you, as I said, for bringing this forward. We all agree we need transparency in terms of costs and charges in pensions, and it is difficult to understand, there's no doubt about that, but we will certainly happy to work with you on this bill. Thank
you very much, Minister, for that. Before we return to the Minister and then to Deputy Nash, we're going to have Deputy Cran, please.
Look, I welcome this legislation, and I want to commend Deputy Nash and the Labour Party for bringing it forward. It is a piece of legislation that we will support. This bill has a very simple objective, and it is something that should just be done. And government should not be slow in intervening when it comes to retirement income and the protection of income after retirement. And we have seen that all too often in the past. I'm reminded of the defined benefit schemes, which saw employers walking away and employees left high and dry. And there was a lack of protections in relation to those DB schemes, and government did not intervene. Pensions, and this has been said more than once here this evening, is a minefield, and particularly that in itself puts an awful lot of people off when it comes to a pension, and a private pension particularly. And part of the problem in relation to all of that is, naturally enough, you will ask yourself the question, is it worth it? How much money am I going to get at the end of it, and what is it going to cost me? And if that in itself is not clear at the start, then more and more people will not choose where they can to establish a private pension in particular. And that is very much part of the problem when we look at the low coverage that exists, and also the over-reliance, I would say, on the state pension at retirement. Of course, we have to say, when we speak about private pensions in particular, that they are out of the reach of many workers in this state, and particularly of people of my generation, where they are struggling with high rents. They're struggling to put a deposit together, and costs mean it is very difficult to put money aside for a pension. But those occupational pensions in particular, where you are at work and you are paying in, we do need to see far greater clarity and transparency, and that is something that should be there. I think in relation to workers and protecting their pensions and their incomes at retirement, that is very much why auto-enrolment is so important, and it's why getting auto-enrolment right is so important, because we do need to supplement people at retirement and the state pension isn't enough. And in the years ahead, where people like the generation before us won't be in a position where they get to have their mortgage paid off before they retire, in a lot of cases, then the state pension very much will not be enough, and a supplementary pension will be important. I remember putting together the party submission, I think it was back in 2018, to the straw man in relation to auto-enrolment, and one of the key points we had made at the time was the need for transparency around fees and charges, and that will be key in auto-enrolment, and it also needs to be embedded into the pension system right across the board. And I welcome what you've said in relation to auto-enrolment, and we do need to see that rolled out now as quickly as possible. But now that I have the opportunity, on a wider note, we do need to see greater transparency right across the board. There's been a number of mentions here this evening in relation to statements being issued to people and annual statements, and clarity and information for people, and that's really important. And I welcome, in relation to your press release this week, that commitment to ensure you will provide PRSI statements in relation to the state pension. That's really important, because in a lot of cases people don't have the information. In some cases people reach or get very close to the state pension age, they don't have enough contributions, but by the time they realise, it is too late. So I think pensions right across the board, it is so important that they have clarity for auto-enrolment and for all other pensions, including the state pension. And I would also say, and I've raised this with you before, we should be moving to the digital era as regards an app for pensions. I hope we'll see it with auto-enrolment. I think to encourage people to remain in that scheme, they need to have an app on the phone, they need to be able to click in, they need to be able to see their pension pot grow, and that will hopefully keep them within the scheme, especially when they're going to have a lot of other costs that will be there as well, and they're not going to always be very easily able to find that money to set aside. So I hope that an app in relation to the state pension as well will be looked at and considered, so people can actually see when they're paying their PRSI what they're getting back from it, so they can be notified when they've reached enough contributions, for example, to be able to get something under the treatment benefit scheme, for example. All of that is helpful. It's clarity and it's transparency for people who are paying tax in this state and who should be awarded for same, and in a lot of cases don't understand and don't have the knowledge and the information easily and easy to hand in relation to what they're getting back for their PRSI, and that includes the state pension. So I hope that is something that will be looked at. I think it's welcome that you've agreed to work with Deputy Nash in relation to this in particular, and I hope that we will see movement on this, and that government won't be slow to intervene when it comes to pensions right across the board, not just the state pension. Thank you
very much, Deputy Curran. And now, in the absence of any other party or spokesperson or member wishing to speak on the bill, I'm going to ask that the question for the Labour Party's amendment, is it the amendment? The amendment to the amendment, is it? Oh, sorry, yes, Minister, do you wish to conclude, or do you want to come in again? 5 minutes if you wish.
Yeah, well, I'll just be very brief, and thank you. And just I've listened to the contributions of both Deputy Nash and Deputy Curran, and I just again to thank Deputy Nash for giving the House an opportunity to debate this important issue. I know this is an issue that the Deputy has a very keen interest in. Just to reiterate some of the points I suppose I made earlier, we all know improved pension cost transparency and better outcomes for pension savers are always desirable, and it is a complex world. When you start to look at pensions and you go to somebody to give you advice on pensions, you need to be awake, because there's a fair bit of stuff that you have to take in, and I suppose it's the closer you get to pension age, you become more conscious of how important it is. So that's why I would encourage, young people that are starting off today to save a little and save off, and to try and build up that pension pot for yourself. The availability of comprehensive and transparent information on costs and charges, it does help consumers to decide whether investments represent value for money. And as I said, since 2021, trustees are required to provide scheme members with an annual pension benefit statement containing key information about the pension scheme, including pension projections, a breakdown of the costs incurred over the past 12 months. And as I said earlier, the Government is already progressing work on a number of key pension policy initiatives which will, amongst other things, improve transparency and of the pension costs. And this work includes advancing reforms as set out in the Roadmap for Pensions Reform, progressing recommendations set out in the Interdepartmental Pension and Taxation Reform Group and a report, and the introduction of an auto-enrollment retirement savings scheme, the implementation of a master trust regime. Now, that will facilitate significant consolidation of pension schemes, and the Pension Council's report on cost transparency, which, as I said, was recently completed and has been looked at by my officials. And as already outlined, it is essential that any new proposals are considered in an integrated manner, taking account of the existing information-related requirements imposed on trustees, as well as the various pension policy initiatives already underway. And this is to ensure that proposals do not add greater complexity and duplication for pension savers and schemes. The timed amendment will provide an opportunity to examine and consider the approach to the provision of charges related to information to pension scheme members. So I just want to thank Deputy Nash and also Deputy Curran for their contributions. I think your private members bill here was actually well timed. This is a week that I think there's a big focus on pensions, but it's a good too that people actually realise, you need to look at the smaller print and give them, make sure that they are getting the information that they need to make informed decisions, because at the end of the day everybody has to make their own decisions on their pensions, but they need to make sure that they have all the information that enables them to do so. So thank you very much.
Margaret Ara. Deputy Nash, you have 10 minutes if you wish.
I'll be brief, and we say that people's eyes glaze over when we talk about pensions. Unfortunately, and I do appreciate it's not really reflected in attendance or contributions this evening, notwithstanding Deputy Curran's presence and her interest in this matter as well, and her interest in this matter and support for the intentions of the bill is appreciated. It is Thursday evening, and it's been a busy week, and it's only going to get busier. So, for those who are here, I'm grateful and I appreciate it. I won't dwell any longer other than to say thank you to the Minister for her interest in this and for her pledge to work with me and my Labour Party colleagues to deliver on the principles of the bill. We may differ on some elements of it, but I think there is a degree of unanimity about what needs to be done. And it seems to me that there may be no requirement for me to move my amendment to the amendment. The Minister has made it clear that she will report back on progress within the framework of the principles of this bill within 9 months, and if that is the case, that's on the record of the House, and the Minister is a woman of her word, as I know. So I look forward to working with her on that, and I'm happy to withdraw my amendment based on the Minister's commitment.